How's it going, everyone? Dividend compounders with cheese here. Did you know that the USA just beat Mexico in the CONCACAF Nations League Championship? I am so excited right now. We can confidently say, objectively, that the USA is the best soccer team in North America. Canada doesn't even come close. Mexico were the clear winners for the past few decades, but the US, man, they've got a scary team going right now. Anyways, let's talk about American Water Works. Ticker symbol AWK. Awkward. If we look at their 52-week trading range, their low is $114 and they're currently trading for about $117. Their high was $153 back in April of last year, and if we zoom out, we can see that back in 2021, they used to trade for about $188 a share. So right now at $117, it's about the same price that they were back in 2019. So right now might be a good or a bad time to jump in. And hopefully by the end of the video, I'll develop an opinion of how I feel about the company. Water is one of those things where it goes through a cycle of super investors falling in love with the industry, and then other times, water is just forgotten. But despite all of the extreme love or hate, let's go ahead and figure out if water is a good business to invest into. So in this video, we are going to look at the intangibles, the finances, and run some valuation models to determine if it's a delicious or a disgusting, hairy, stinky dividend stock. American Water Works is a utility company in the business of providing clean water to sinks and bathtubs, but also they do wastewater management. Their customers include commercial buildings, the US military, residential neighborhoods, manufacturing facilities, and even school buildings. Water is essential for life and is an industry some doomsday preppers believe will be a big winner when the world decides to go crazy. Pretty simple business model with a bright future, as water will always be critical to function in our day-to-day lives. However, with that said, they do have a headwind they are currently navigating through, and that's why their stock price right now is depressed. What is this obstacle? PFAS. PFAS are essentially tiny particles of plastic in your water, and when you digest it, it leads to health complications because plastic accumulates in your body. It's also known as a forever chemical because it just stays in your body. As such, in 2023, the EPA mandated water utilities to do something about this and to filter PFAS out of their water. The conservative estimated cost to do this will be $3.8 billion annually, which is a pretty heavy burden. But for American Water Works alone, they expect to spend about $1 billion over a 3 to 5 year period to improve and update their water filtration infrastructure and to clean out all of your pube hair trimmings. Yeah, I know you pee in the shower and use a dirty, rusty razor to shave your ball hairs. You are a nasty creature, my friend. But here's the thing about American Water Works. Not only does the water taste like bald eagle urine and freedom, but their financials, numbers, balance sheet, and economic moat are just fantastic. So even though American Water Works is a utility, it trades at a higher multiple because of their growth potential and business fundamentals. It's currently trading for about the same price that it was back in 2019. Next, we are going to look at some numbers and finances. The first one is going to be the revenue. Investors call this the top line. So back in 2015, they posted about $3.1 billion, which is pretty good. And when we look at the following years, it does in fact look like their revenue increases year over year, except in 2022, where it dipped by negative 3.5%. However, they rebounded by posting $4.2 billion, which was an increase of 11% from the year prior. So their revenue is a pretty picture. And when we look at the net income, it's kind of an inconsistent story. However, if we zoom out and look at it over the years, from 2015, where they posted $476 million, to last year where they posted $944 million, it is headed towards the right direction. However, along the way, sometimes it goes up and sometimes it goes down. So a green flag for their revenue and a yellow flag for their net income. Their current dividend yield is sitting at about 2.4%, and their dividend payout ratio is roughly 57%. Back in 2015, they paid out $1.21 a share. You fast forward throughout the years, and now they pay out $2.83 a share. And when you look at the past 3 years, the average annual dividend growth rate is increasing by 8.9%. So effectively, you can think of this number increasing by 8.9% every single year. And they have been increasing their dividend for the past 16 years. With $10,000 invested in January of 2014, in about 10 years, that would have grown to $34,000 with the dividends reinvested. That means the year-over-year CAGR is 12.9%. Oh my goodness, this is beautiful. In their best year, which was 2019, the stock price went up by 37%. In their worst year, which was 2022, they went down by negative 17%. But to have your money increase by 300% in a span of 10 years, that is just phenomenal. Next, we're going to go ahead and look at the technical indicators to figure out what the stock price movement has to say about American Water Works. So based on their RSI and trading pattern, I think investors are selling out of American Water Works right now. Their historic RSI is somewhere around 50 to 60. Right now, their RSI is 35. Not only that, the stock price is flirting with hitting that lower Bollinger Band, which is the line of support at $114. So worst case scenario, they could potentially keep trading downwards until they hit that $114 stock price. Then again, technical indicators is really speculative, so we're going to go ahead and move on. Alright friends, we made it to my most favorite part of the video, which is figuring out the intrinsic value by doing some valuation models.
When I calculate intrinsic value of a business, the only reason for making an investment and laying out money now is to get more money later on, right? That's what investing is all about.
Now, the first way we're going to determine the intrinsic value is by doing the multiples valuation. Essentially, we're going to be comparing American Water Works to their industry peers and figuring out a market-derived price for American Water Works. So every single one of these companies are in some way, shape, or form involved with water or wastewater management. The median PE ratio is 28.9 for this industry. Taking this number into consideration with their current earnings per share of $4.89 a share, this spits out a multiples valuation intrinsic price $141.64. As a refresher, remember they're currently trading for about $117. Their 52-week high was $153. So $141 is not out of the question. Next, we're going to be doing the dividend discount model. Essentially, the dividend payment and average dividend growth rate is going to tell us what the intrinsic value is going to be for American Water Works. And when we look at their dividend history, it is a very pretty picture to see. The average dividend growth rate year over year is 11.7%. That is amazing. That is fantastic. However, we're going to be a little conservative, play it safe, divide that by 2, roughly, and plug in 6.4% instead as their future dividend growth rate. Plugging 6.4% into the formula, that spits out a DDM intrinsic value for American Water Works, $188.20 a share. And last but not least is going to be the Benny Graham's valuation model. Essentially, the growth rate projection alongside with the current AAA corporate bonds yield rate is going to tell us the intrinsic value. Now, the Graham value never lets me down in giving me the most bearish number. So sometimes it's good to have it as a sanity check. Taking all of these numbers into consideration and plugging it into this formula, that's going to spit out an intrinsic value price of $67.71, which brings us to the conclusion. What is the intrinsic value for American Water Works? Well, that's going to be $132.52. But now I'm actually curious, what does Wall Street think the price target should be? Wall Street believes that American Water Works should be at around $151 a share. Their high estimation is $169, and the low estimation is $135. So we said $132 a share, Wall Street says $151. So after hearing everything and doing my research, I'm going to try to figure out what is an acceptable buy price. In order to do that, I need to bake in a margin of safety. That way I don't overpay for the company.
When we see a great business, it's like if you see somebody walk in the door and you don't know whether they weigh 300 pounds or 325 pounds, you still know they're fat, right? And so if we see something where we know it's fat financially, we don't worry about being precise, and if we can come in that particular example at the equivalent of 270 pounds, we'll feel good. And you don't need a huge margin of safety. You always should feel you're getting a little more than what it's worth.
Now, if a 10% margin of safety baked in, then my acceptable buy price is $119.26 a share. And if I were to buy American Water Works at its current trading price of about $117, then I would get a 11% margin of safety baked in. So what's my opinion about American Water Works? And remember, my philosophy is that I am not just buying into a stock. Instead, I think of this as investing into a business that has the potential to grow into a dividend compounder with cheese, or investing into a company that has a bright future. And I think right now, American Water Works is facing the PFA filtration project that's going to eat away at their bottom line for the next 3 to 5 years. And for investors, that's considered a headwind. However, upgrading and innovating equipment is a part of the utility industry. Whenever they have a lot of cash on hand, they have to reinvest into the business in order to renovate and to update the equipment. So I'm not too phased. As a matter of fact, I think right now, according to their historical PE ratio, they are undervalued. American Water Works has a very simple business model and a predictable revenue structure. People will be using water 5 years from now, and 50 years from now, and 500 years from now. Boring, slow, and steady are the words to describe some of the best investments. And luckily for American Water Works, they fit the description. So personally, I think I'm going to be buying shares when they hit around the $115 to roughly the $114 price range. Please do your own due diligence and research to figure out how you feel about American Water Works. You might think that they are a horrible company with ugly finances and numbers and disagree with me. Anyways, I'll talk to you next time. Stay safe. Dividend Compounders with Cheese, signing off.